Good morning. This is David Brown, and the presidential election is over. And what does the market want now? Well, we know that who the president's going to be, and we know a lot more about him than we would of an incoming president. So a lot of uncertainty gone, a major uncertainty gone. And you say, so why is the market down almost 4% in 2 days? Well, before you get too excited about it, you might read Mark Hulbert's story in Market Watch today, where he shows that most of the time in history, more often than not, in fact 75% of the time, when the market goes down badly the first few days, the market ends up doing very well over the next 4 years. Other than that, keep in mind that the futures were doing pretty well after the election first was announced during the middle of the night. And the futures looked like it was responding well till some really bad GDP numbers from Europe came out, and they were bad. And I don't have time to go over them this morning, but they were worse than expected, both in the current time and in the projected near future. Now, the good news about that is that they have the tools to solve the problem. We know that. That's one thing we accomplished this summer. Europe has the tools to solve the problem. So now we got to worry about our own problems. We have the fiscal cliff. I don't know what will happen there. You have the possibility they'll kick the can down the road for 3 months, or maybe in this brief honeymoon where everybody loving everybody and everybody's promising to be good boys, they could run out and get this thing done. So that would be another major uncertainty out of the way. Now, let me tell you another reason or two why the market's falling. That probably isn't at first obvious. One of the things that's most likely to come out of the fiscal cliff problem is higher capital gains, especially for wealthy people. So what are they doing? They're selling their Apple stock that they've made a fortune on the last couple of years, and therefore Apple's reacting badly. And if you look carefully, you'll see a lot of the big moving stocks of the past 2 or 3 years are doing poorly the last 2 days. Why not? I mean, if your taxes are going to go up 20%, from 20 to 25%, only, it doesn't take a genius to figure out now's the time to sell. So that's another reason it's going down. Obviously, you have some Romney followers who are probably dumping some stock. Here's where we go. We know some industries that should do well under the president's proposed policies: energy, healthcare, and housing. And we know some that are likely to have some problems. The financial skeletons are still there and still a potential problem. So some stocks to think about might be Valero in the energy industry, U.S. Airways. It would benefit much from oil prices coming down. Other than that, we're just going to have to wait to see how it happens.